Hello, Sembcorp Industries has shown why being a diversified conglomerate really pays. It allows you to navigate the troubled waters of the global economy, and even while one business perhaps is not doing so well, the other one can pick up. Sembcorp Industries is in fact in the process of developing a third business, which might over time become a third pillar that will help in this diversification process. As we look at the annual review, I encourage you to get out your own copy before you attend the annual general meeting and follow along. Perhaps there are even things in there that you spot that I haven't. But for what it's worth, let's take a look at some of the main parts of the annual report, starting with the look back over the year that's been, the 2013 year, ended December 31st. And what we see here, first of all, is how the year performed by quarter. So these colourful bars show you which ones were the stronger quarters and which ones were the weaker ones. And what you can see here quite clearly is that the revenue side, as well as the profitability side, as we'll look at in a minute, really kind of slowed down in the second quarter but picked up in the third. So this is the revenue chart, and now here is the bar chart for the profit number. That is the net profit number. And you can see how, once again, that thick green bar certainly made up for the shorter light blue bar, indicating that the second quarter wasn't quite so strong. So that was how the year was in terms of time. Let's look at how it was in terms of business unit. And once again, it has two main units: the utilities business, power generation and so on, and the marine business where they build oil rigs, among other things. So let's take a look at the group first of all. And what you can see here is the revenue chart. The orange represents utilities, the grey is the marine part of the business, and you can see here that utilities was actually slightly lower. You can see the orange bar has shrunk somewhat, partly because they had lower sales from their utilities business in Singapore. But the overall right bar is still longer than the one on the left, and that's because the marine business made up for whatever the utilities business was lacking. So even though utilities came down, marine grew there, as you can see, in fact, by 25%. But that's the revenue chart. Let's look at the profit chart, because this is where it gets really interesting. What you can see here is that even though utilities revenue came down, you can see the orange bar here, actually utilities profit went up. And marine, where we saw a big jump in terms of revenue, didn't quite manage to translate that into profit. So utilities is still a very strong part of the business despite the decline in revenue. In fact, we saw profitability for utilities grow 20% as their net margin went from 6.6 to 8.8%. So you can see from that utilities has grown in profitability, whereas marine was the other direction, down from 7.4% to 6.1%. What you also see in this bar chart is those two dark grey patches at the top. Now, you didn't see this on the revenue chart because in terms of revenue, it's still fairly small, but thanks to, among other things, revaluations, we've seen the urban development part of the business, which barely featured in the revenue chart, now clearly visible in terms of profitability. So that's that third leg that I was talking about. Perhaps in time, we will see those proportions change as urban development, particularly in countries with fast economic growth like Vietnam, Indonesia and China, as that starts to really make its presence felt. Let's have a look at the context of all of these numbers compared to the last 5 years. And that's where we turn to this particular page, where we can see the comparison over the last 5 years, the one with all the colourful bars. Let's zoom in first of all on the revenue bar. And what you can see here is that the revenue number reported for 2013 is higher than at any other time in the last 5 years. On a profitability basis, at $820 million, it just managed to top the $809 million registered in 2011. So again, profitability, the highest at least in the last 5 years. In terms of dividend, shareholders will also be voting on this at the annual general meeting. The dividend is back at 17 cents, consisting of a 15-cent per share ordinary dividend, and you can see over the last 5 years that's been quite consistent. But now we've got that cherry on top, like we had twice other times during the last 5 years. Here is a chart, though, which might not be quite so positive and is worth perhaps asking about at the AGM. It is the chart showing return on equity, ROE. Return on equity simply means what is the profit divided by the shareholder equity. In other words, how much of a return are they generating based on the equity that they have? And what that shows is a continuation of the downward trend. Now, ROE in and of itself doesn't mean very much unless you're comparing it to other companies in the same business. After all, the number there, 17.1%, is that a good number or not? Well, let's take a look at Keppel Corp's return on equity just by way of comparison. And I realize it may not be a fair comparison because Sembcorp Industries is in businesses which Keppel Corp isn't, and vice versa. But for what it's worth, what we are seeing here is that Keppel Corp comes in at 14.9%, excluding revaluations, down from 22.6%. So the decline in Keppel Corp's ROE has actually been more steep. And because both of them build oil rigs in one of their major businesses, that's why I figure that might be worth comparing. So anyway, something that perhaps you might like to discuss with management, how they feel about the ROE's downward trend and whether they're worried about it at all. The management, incidentally, is these two gentlemen. They will be at the AGM, the chairman, Ang Kong Hua, and the group president and chief executive, Tang Kin Fei. The chairman's statement is usually a very good place to start. It's right at the beginning of the document, page 6 in this case, where you'll read the discussion of how the year has gone, what some of the major achievements were, but also how the year ahead is looking. And it is with that outlook in mind. That's what I read the chairman's statement for, and follow me as I pick out a couple of main points from that. The first is here on page 9, the $60.6 million impairment of their Wilton facility in Teesside in the UK. In essence, they're now looking to fix that business in two ways. First is to cut costs and rationalize the business, right-size, as they say, but also to then turn Wilton into a green hub. That's hinted here on page 9 of the chairman's statement, but you can read more about that on page 63, where they elaborate in some detail on what they're doing with Wilton. Also in the chairman's statement is this one here, this particular commentary on their Indian power plant, a 1,320 megawatt power plant in Andhra Pradesh. Andhra Pradesh is the location for where their own power plant is, but they've also bought a 45% stake in a similarly sized plant. And so India is looking like it's increasingly important for Sembcorp Industries. Referring purely to the one that they own, that one's 80% complete, and the first of the two units generating power should kick in by the second half of this year. And incidentally, here is a picture of that in the statement. In fact, this is page 64 where you can see this particular image. Onward in the chairman's statement and look at Sembcorp Marine now. The order book is the all-important figure because it's by looking at how many orders they've got coming in that we can see what the revenue is going to be like in the future. At $12.3 billion, as at the end of 2013, the number is down slightly from the $12.7 billion order book that they had at the end of 2012. These orders, though, should see them through till 2019. During the course of 2013, they also generated $4.2 billion worth of new orders. Now, let me maybe explain a little bit about the significance of these, because at $12.3 billion, that's a fairly sizable amount. Their full year revenue from the marine business was $5.5 billion. So you can see that they've got more than 2 years worth of revenue on the order books, but actually it's another 5 years before those orders continue to be or are actually delivered. So in other words, they need to keep those new orders rolling in order to keep replenishing their work on hand and therefore make sure that their revenue number doesn't fall. Now, seeing that $4.2 billion worth of orders were generated during 2013 and their full year revenue in that business is $5.5 billion, as I mentioned, that means they really need to pick up in order to make sure that those orders keep coming in, the revenue number keeps at least stable, if not growing. Also, what's interesting is what those orders were for. Now, during 2013, that $4.2 billion worth of orders that they got in was substantially, about 2/3, for jack-up rigs. But the order book, as at the end of the year, is about half made up for drill ships. So they had a big spurt during 2013 for jack-up rigs, but overall, most of their orders, about half, are actually for drill ships. Jack-up rigs make up about 1/6 or so of their total orders. interesting if you're following the oil market in particular and where those jack-up rigs are being ordered. There's also mention in the chairman's statement of an MOU to perhaps build a yard in the Kingdom of Saudi Arabia, feasibility perhaps to be carried out there. Read more about it in the chairman's statement, as well as their affirmation that the $250 million Energy from Waste facility on Jurong Island, which will cater to around 1/3 of steam demand on Jurong Island, looks set to be on track for completion during the current year. So, that's the chairman's statement. Let's look further into the outlook. And for that, turn in your annual report to page 66. That's where you see this page. And let's now zoom in on that timeline on the left there, because what they've detailed is not just the things that they've done during 2013, but the things that they're going to do. So from an investor's perspective, it gives you some idea of where the company is going and when these projects will be launched. From top to bottom, this timeline takes us out by 2 years, so to 2016. What you see there in orange is the Thermal Power Tech Corporation India project, which I've mentioned before. That should be completed in 2015. In blue, you see the Fushun water treatment plant, due for completion end of 2014, as well as several others, one in the UAE and some in China, and the Huanghua wind power capacity expansion, noted there in green, should be completed by the first half of 2015. And then looking at the bottom of that timeline, some more. The NCC Power Project should start in 2016. That's the one that they bought 45% of. We also have in blue another industrial wastewater treatment plant in China, and also in green that Energy from Waste facility and the Wilton 11 Energy from Waste facility about 2 years out from now. Once again, a good way to gaze into the crystal ball to see what the future holds. Now, some additional points to note. Here in particular, page 69, I did mention the outlook. And let's zoom in particular now to the utilities and marine business. What we're seeing here is that competition is expected to be intense in the Singapore power and gas market. Singapore makes up about half of the utilities revenue. Overseas is set to expand even further. So one thing that this hints at is that perhaps overseas is going to be more important in future. We'll have a greater share of revenue or contribution of revenue in years to come. What we also read is the commentary here about the energy and water projects. Nothing specific in terms of numbers, but they're talking there about delivering long-term growth. So perhaps in the short term we can't see too much of a spike, but over the long term the value of these various projects, given their track record, should make its presence felt. Turn to page 75, and that's when we arrive at this page. And what you see here is commentary about how the marine business is looking like. And this one is perhaps a little bit more important, because what we've seen in the marine business, revenue increasing but profitability falling. And what it says in essence is that the global economy remains fragile and uncertain, words that they have used, fragile and uncertain. The Sembcorp Marine is going to just steady as she goes, focus on the core business, deal with the tight labour market that we're seeing in Singapore at the moment. And the last line here in this breakout is perhaps the most telling. It says that margins remain challenging. Margins remain challenging, quote unquote. So once again, that decline in margin that we saw during 2013, this hints at the fact that perhaps we will see further margin erosion during the current financial year. Now, on to page 79, and I did mention that utilities and marine were the two main pillars. Now it's the urban development part of the business, which once again is very small, barely shows up on that chart of revenue, but could be with the third pillar in years to come. And on page 79, they give their outlook. The order book there, this is expressed in hectares. 281 is the number at the top of the year under review chart, 281. Now that doesn't sound like a lot, and it probably isn't, because on page 81 it then says that they have 11 projects with more than 10,000 hectares in gross project size under their belt. So 281 compared to 10,000 obviously is a relatively small number. Listen out at the AGM for further commentary on how they're looking to develop that in years to come, and how they're going to grow it into that third pillar. Almost done. Let's now look, lastly, at some key pages in the back part of the annual report. So we've gone past all the photographs of the ships being developed and so on in the earlier part, and let's now look at these sections here in green. Page 231 is where this one comes from. It shows you where the debt is. Now, Sembcorp Industries is actually in a net cash position. In other words, it has more cash on the balance sheet than it has debt. 2.25 billion worth of cash to be precise. The debt, as you can see here on page 231, is 1.88 billion. So not as much debt as they have cash. And of that 1.88 billion, they have around 410 million due in the current financial year, with 680 million due up until 5 years from now. So you can see that the debt is relatively evenly spaced over the coming 5 years and beyond. And I also just wanted to draw your attention to this particular page over here. It shows you some of the resolutions. Among the resolutions being voted on are Resolution 8 and 9. This is always of interest for retail investors, so I thought I'd break this out for you. In essence, the company is looking to get your approval for directors' fees of 1.6 million during the financial year ended December 31st, 2013. That should be about $1 million more in Resolution 9 for the 2014 year. The number of shares, or the amount of money's worth of shares to be, restricted shares to be precise, to be awarded under their Sembcorp Industries restricted share plan should also increase, not quite double, but certainly around 50% again. All of these topics to be discussed at the annual general meeting. Here is the date, time and venue. And if you're going along to the annual general meeting, make sure that you take the annual report with you, look at it yourself, read it yourself before you go, and make informed decisions about how you vote when you are at the AGM.